on Aviation podcast. All right. Hello, everyone, and welcome to another episode of the On Aviation podcast. I'm your host, Orlando Spencer, and with me today, as usual, is Daniel and Zioka. And today, what we want to talk about is central bank digital currencies and the possible effects on the aviation industry, right? So before we get started, Daniel, go ahead and kind of give your own preamble to this topic as well.
Right. Yeah. So I think CBDCs have been pretty much something that not many people are quite familiar with. To be honest, this is something that I started looking into at the beginning of the year after it started trending. I got to realize that it's actually being adapted across the world by some countries. We're pretty much a little bit late on having this kind of system implemented in the US, but I don't see much good of it, to be honest. I just think it's a means for the Fed to make printing money much easier and also having some sort of control. But yeah, that's my thought, Orlando. What are your thoughts?
And yeah, we're going to dive right into it. I think I'm in alignment with you on that. I'm in alignment with you on that. Let's first go ahead and define kind of what are CBDCs, what are central bank digital currency. And the first thing we want our listeners to know is that central bank digital currencies are not to be mistaken for cryptocurrencies. They're not the same thing. They're different. Okay?
Right.
Cryptocurrencies are built on the blockchain. They're built with a certain ledger structure. They have a certain way of validating who owns what, how much amount of the cryptocurrency. And in the case of Bitcoin is limited to a certain amount of coins that could ever be mined, which controls the supply of coin, which also controls inflation. All right. And so in essence, over time, if a cryptocurrency like Bitcoin is used, you'll have slow deflation over time, meaning a reduction in the money supply relative to goods and services, which means that as you earn more, you spend less. And it's almost like the 17th, or say the 19th century, when everything was going good, but the middle of the 19th century on up, when things were going good in the United States, you had price reductions where the productivity was really good and the supply of money was relatively stable because it was pegged primarily to gold. And so that's what you primarily see there. As for central bank digital currencies, they're using the terminology, but they're not the same thing because they're really a digital form of already fiat paper money. And fiat mean by decree. We say it's money, so it's money. All right. And not just that, the government say this is what we're going to use as legal tender, so you use it. But people also have faith in the thing as well, so it's being accepted. So that's how you should look at central bank digital currency, as just a digital form of regular money. Now, something to note here is that we already have digital form of paper money. A lot of what we use are on cards. They are not necessarily paper. I believe
Right.
So currently right now, it's only about 2% or so, if my memory serves correctly, about 2% or so of actual money in the economy, say the US economy, is paper. The rest of it is on cards and debit cards and transfers between accounts, and now you have Venmo, PayPal, you have all these things. You actually don't handle cash that much, right? Some places do, but you don't handle cash that much. So in essence, there is already a digital currency. However, it is not central bank digital currency, and the central is the important part. So as we go down to the arguments for and the arguments against central bank digital currency, then you kind of get the idea of why the central part of it is important rather than just having it digital, because most of the money we use today is quite digital. Daniel, what do you think about that?
Yes, I think it's pretty much digital. To be honest, it's been a very long time since I handled cash. Especially in California, so many businesses have adapted to using just cards. The only time I only use cash is probably like I think 2 years ago in Pennsylvania when I had to use a laundry machine. I haven't touched coins during ever since. But yeah, I think a lot of things have been digitized, so I don't think this is bringing much difference in that aspect, whereby um, a lot of things are, gonna be even more digitized. That's already happened. The main thing that I feel is happening is that there's now not sure if I should call it pivot, but a center for where money is going to pass through when you're transferring. So it feels more of like a means for the Fed to control or see what's happening on the transfers or where money's flowing through. But yeah, that's pretty much what I see right now. I don't think it's adding anything.
Again, my friend, I agree with you on that one. And we're going to talk a little bit more about the idea of calling it digital currency, and then it's already digital money already, and what that means for possible implementation. We'll talk about that. But what about the arguments for central bank digital currency? Now, we wrote two articles, right? Last week we wrote an article about, we titled Central Bank Digital Currency, Net Positive for Aviation. We asked the question, is a net positive for aviation? And the argument that we laid out there through another piece that Daniel Lakayahe did was that central bank digital currency is not good, all right? And then another one we wrote, we promised that we're going to write another one, and we were hard pressed to find a lot of articles saying that this thing is a great thing, all right? And we found one from the World Economic Forum, and some people like them. I'm not sure, not a lot of people like them. They get a lot of backlash from what they're trying to do. You'll own nothing and be happy. Let's eat bugs and all that good stuff. We don't know. So they had some concerns too as well in terms of security and so on. But for the most part, they think that this is a great thing. Okay, they think it's a good thing. Mm-hmm. And so the argument for CBDCs is that you can better control the environment, the economic environment, because you don't have the middleman, which are the banks, and you can finely tune where you want to put money in terms of monetary policy. Right? And so you'll reduce the risk of recessions because you can manipulate the monetary policy down to the finest granularity, so to speak. And I think that's what the big thing for it is. And that works well for government, that works well for central government, that works well for central planners. But that doesn't work for the market very well, because the market cannot plan when one person or a group of people are trying to just move this thing up and down. We've tried it with interest rates. It doesn't really work out very well. And so the argument against is using the same point, that if you can control the money supply, it is the money supply in the first place that's causing the problem. It is the monetary policy, rather, that's causing these problems. The manipulation of the money supply that's causing these problems. And so by manipulating the money, by being able to even greater, in a greater way, manipulate the money supply, you'll have even more boom and bust. You'll have even more malinvestments. You have even more problems, because at the end of the day, and what I believe is that you can always manipulate the money. You can always push money out. You can do this. But the one thing that no one can control is the behavior of people, unless you put them under servitude. You can't control their behavior. Yeah. So you can put money all you want. You can stimulate this. You can stimulate that. But once people lose faith in something, you just cannot control them. So the people is the equation that central planners and all these different things, CBDCs, whatever it is, always have a problem with. And so what you notice, which we talk about implementation, is the ideology. So to change people's behavior, you change the ideology, and that's how you probably get this thing adapted. But the argument against is that what a lot of people call the Keynesian. You're right. Lord Maynard Keynes was very, very popular in the 30s and upward, and we're operating under pretty much his economic principles, which a lot of people have debunked. Right, the Chicago school, the Austrian school have debunked this economic principle, but we're still living under it. And so we can do more of that. We have more of the modern monetary policy. I read a book from Dr. Stephanie Kelton, who had the idea behind that book is the government can print any money they want if they're the sovereign country that prints their own money, that has their own money, right? And so that stuff leads to inflation, I believe. But the argument against rather CBDCs is that CBDCs will cause the Federal Reserve and central banks to manipulate the money supply even more, which will cause even greater problems. It seems as if it's going to solve stuff, but it's going to cause greater problems. So that's the argument against. Another thing that's going to happen, what they're trying to do, is getting rid of the banks. Because here's what happened. If COVID lockdown. Let's take 2008. COVID was a little bit different. Let's take 2008. 2008 banking crisis. The government put the economic crisis. The Federal Reserve punched a bunch of money through the government and Treasury, put a bunch of money, monetary fiscal policy, put a bunch of money in the economy, or give the banks a bunch of reserves. But the bank didn't use those reserves. The bank didn't lend out the money because the bank felt like, we're not going to lend out this money. These people can't pay back this money, so they're going to lend out the money. So the problem the central banks face is that as they try to stimulate the economy, the middleman, the banks are like, we're not doing that, right? So they hold the money in reserves, right? And take a small, because the Fed pays them if they keep with the Feds. The Feds pays them a funds rate. So like, we'll take the Fed's funds rate because it's risky out there. So the money's not being circulated. So the bank has the money, just holding the money, right? What the Federal Reserve, what the central banks can do is cut out the banks and give you a Fed coin, for example. They call it coin. I'll talk about that. We'll talk a little bit more about implementation. They call it coin. They give you a Fed coin. And if they give you a Fed coin, that goes directly to your wallet. You can spend that, but at the same time, they can take that back. They can give you negative interest rate if you hold the money too long and not spending certain thing. It can always go down to a point where like, we don't like what you're buying. We're not going to give you money for that. Or we're going to cancel any purchase on, say, you shouldn't be eating pork, right? As an Adventist, right? They say you shouldn't be eating pork. And you're not going to buy pork. And so every time you go to buy pork, then the coin don't work. So because you can manipulate the coin because it's completely digital. So those are the arguments against. But the thing, though, is how could this be implemented in the U.S. economy? So the first thing is that a large number of people don't, as I've said before, they're very wary about this stuff, right? We have all the problem with the printing of money already. Once we came up with the gold standard, once we closed the gold window in the 70s with President Nixon. We just been on a paper standard, and we've been we've been experiencing inflation the whole time. And so, people just don't trust this stuff. So how do you do it? The first thing is that we've been using digital money for a long time. Venmo, PayPal, Zelle. We've been using, especially with PayPal, started at Zelle, credit cards, debit cards. I think Sweden, those guys don't even use money. No one would take your money if you're in Sweden, right? I believe it's Sweden, right? And so people are used to that. Now, then you name it digital currency. It's familiar, it's hot, it's popping, it's a Bitcoin lookalike, it's a Ether lookalike, right? It's a Ethereum lookalike, so it could work. So you blend those two together, right? But it's not, as we said before, it's not Bitcoin, it's not cryptocurrencies, right? But they're using that as an implementation. So the idea would be to slowly roll this stuff out. The Federal Reserve talk about doing a pilot project. I believe it's Citigroup and Wells Fargo is going to be doing this pilot project. Just to talk a little bit about folks who already have this going. China already got this going. The Caribbean is all the way in this stuff, right? Right. So Jamaica is already in this stuff. A lot of the other Caribbean countries are already in this stuff, right? So they've already set up shop with the central bank digital currency. And you find the Caribbean will be one of doing this a lot more because they need to manipulate their money even more because the economy slump is been in a slump in the Caribbean for decades, and they're struggling with their money supply and all that good stuff. So they're definitely gonna want to do that. So we'll see some people learn that the Federal Reserve is saying, we're going to do a pilot project. We're going to see how it works because they know Americans are not for that for the most part. However, how they'll roll this stuff out is, one, with the cues we talked about before. You're used to digital money already. Okay, money on plastic, money on screens. You're used to that stuff already. We name it. We give it a name, right? We give it the digital currency name. Fine, good. So it's familiar, okay? So that's how you transition people, right? You take the familiar, you take something you're used to, and you transition to something new, right? You see us do that in our products as well when we're working with our clients. They're working
Yeah.
with the old system, and we need them to get on a new system that is better for them, but their mind is still stuck in the old system. So what we do, we help them to transition
Yeah.
by giving them something familiar but
Hmm.
new. All right, and that's one of the reasons
Yeah.
why you see the Apple keyboard on your iPhone. It still has a QWERTY screen. It still does have a QWERTY screen,
Right.
a QWERTY keyboard. QWERTY keyboards
Keyboard.
are
Yeah.
inefficient, completely inefficient, right? And so because it's
Mhm.
inefficient, right? What Apple does is put AI into the thing to allow you to type a lot better, but they tried changing the keyboard, it didn't work. They just keep the old keyboard. So that's the idea. Get you to a better
Uh-huh.
system, but keeping the old standards. So that's what they're gonna
Right.
do with this thing, all right, in terms of moving it forward. But before I move on, I want to hear your thoughts about the implementation itself and how they do it. But before I let you go, real quick, let me talk a little bit about when is the best time. And maybe I'm putting ideas in their head, but when is the best time to put this roll this thing out? You have the ideas about
Hmm.
digital currency. You have you. It sounds good. It sounds familiar, and you're used to digital money. How they'll roll this stuff out is wait for an economic crisis and say, oh, we're going to give you a
Right.
stimulus money, but
Yeah.
this time it's going to be on a Fed coin. Get your Fed coin.
Yeah.
And so people get used because they need the money, so they get used to spending it that way, doing it that way. I do not, in the long run, see much resistance to this stuff from everyone. Given how
Hmm.
the strategy for rolling this stuff out will be, right? But let me turn it over to you
Yeah.
to hear your thoughts a little bit more about this.
Yeah, I think I have the very same thought. I do not think people are going to resist this. And I feel like the only reason, as you mentioned, the only reason they're doing this right now is because of the kind of economic situation we were in. And now that things are looking like this, they're probably thinking that it's probably good that we should have this in place so that next time if it happens, they have probably a lot better control of how the economy is gonna react. So I don't think people are gonna oppose this because this is it's just one of those things that people just look over. They don't think too much about it. What matters to them is if it's gonna be affecting them or if it's gonna take away finances. But the way it's being put out there, it's not like that. It's not telling people that you might have a negative interest if you ever invest in a Fed coin. So I don't think that's something many people will look into, and I think it's definitely going to take off. And all I can do is just hope that it's not going to have a negative it's not going to have a negative effect on our economy. But what I look forward to is just better control of inflation. I'm not sure if they're going to use this to better that. I'm not sure if it's even possible to use it for that. But I do think that tweaking the economy from time to time just so things look good instead of fixing them just makes things worse. Yeah, that's my thoughts.
And I think you have a point there too, right? Because the point you're making is that you know it may not make anything better. In fact, governments generally want inflation, right? And it is clear that if I owe you $100
Mhm.
and I have the ability to create dollars, if I create another $100, then the $100
Mhm.
you own is worth 50% less. Does that make sense? And so
Yeah.
if the government owns trillions of dollars in debt and then they can print more money, but the purchasing power of the money goes down, they actually are repudiating some of the debt. They're actually saying, oh, they're actually getting rid of some of the debt because the actual value, even though they're paying the same dollar amount, the actual value of
Mhm.
the money is lower. So they're actually, in a sense, defaulting on their debt in a sense. But that's another topic for another time.
Yeah.
So what I'm saying is that
Mhm.
if you implement central bank digital currencies and government all generally has the propensity to print and spend, is gonna be inflationary. All right, there's a lot of programs to pay for.
Mhm.
There's a lot of interest groups need to be taken care of, and there's a lot of stuff that needs to be done. Right. So thanks for that. The Our
Right.
listeners may be wondering, okay, well, how does this affect the aviation industry? And we've always said this. The aviation industry does not operate in a bubble. It may be regulated. It may have some things that it does a little bit differently from everywhere else, but in terms of an economic perspective, it is still a relatively free market, and it's affected by the market. And so what we see in terms of implementing CBDCs in the industry, it's the same things that we've been talking about earlier. But one of the things that we're seeing, we would expect to see, is that the aviation industry would be even more captive than people going through an economic crisis. And here's why.
Right.
One, the aviation industry is highly regulated by the FAA, the Federal Aviation Administration, and by extension, the government. And so also, when there's a challenge in the economy, the aviation industry gets a lot of support from the government. The last time pandemic, you got a bunch of money, billions and billions. I think it was $21 billion, I believe, or something around about there, or 60 billion, some number there, right? And so they got a lot of money. Now, in time of crisis, okay, rather than getting the money through the bank, the Fed says, you're getting your money from us, and this will be a part of the Fed coin system. All right? We're getting the money. We need to survive. Okay, give us the money. Then on the other hand, the customers who are flying with the airlines have Fed coins. But the airline's going to say, we don't want your Fed coin. No, they're already plugged into the Federal Reserve System, and they can accept Fed coin, and it's money, so they're going to take the money. So even in the aviation industry, from the consumer point perspective and the business perspective, you can expect that a rollout, if it's done strategically by the central banks, right? If it's done strategically by the central bank, it will be accepted, right? And so while we are talking here, I know our listeners may be wondering, so what side of the fence that you are on? And we'll talk about that as we go on the podcast. We're definitely going to touch that, but we want to make sure that we let folks know that everything we're saying in this podcast also relates to the aviation industry. It's not a bubble. And so, as we've said before, the 2 points to this is that on one side, you have the consumers who would have had Fed coins, again, based on how we discussed how the implementation would have been implemented in a crisis, along with those familiar cues by the consumer. Then the other piece of it is that you have the aviation industry, airlines in particular, who gets a lot of support from the government. And if the Feds decides, and the government and the Fed decide, Treasury and Fed decide that this is going to be how we're going to send this money to them, so we can roll out the Fed coin, roll out the CBDC, then that's what they're going to do. And so, in essence, the airlines are even more captive than people. And so, one of the things that I think is the industry itself, again, is dependent on the government during times of challenges such as a recession, economic crisis, and so on. I think one of the reasons you've touched one of the points. One of the point is that the aviation industry will, not just will, but they are somewhat vulnerable. They are too big to fail. They get into that category. Too big to fail. We need the industry. We do need commerce to be moved. We need this. We need that. A lot of it is lobbying as well. All right. So just make sure you remember that. Yeah. Right. And so.
Right.
That's a big part of it. A lot of it as well are jobs, right? So a lot of it are jobs. So inside that, all of that comes together to give you an industry that just cannot go anywhere. I wonder if the same thing happens for the shipping industry. I know that you have some laws that the shipping industry are very favorable to the shipping industry, but does it affect the shipping industry? And we move more cargo by ship than by plane, right? Much more important cargo than by plane. It's pretty much box and styrofoams and electronics that you move by plane, right? And paper.
Yeah.
All right. And so I think there's a lot more that goes into it than just how much they're shipping. People traveling back and forth, that's a big thing as well. So there's a lot more that goes into it, right? But let's talk a little bit about the outlook. As central bank digital currencies are rolled out, as you roll this stuff out, you push this stuff forward, what exactly can we expect within the aviation industry? And, I believe that what's going to happen is that as you roll this stuff out, you'll take the biggest players within an economy and you have them slowly incorporate this into their operation. So, for example, currently we talk about a pilot project being done with the Fed coin, with the Federal Reserve here. And right now we're talking about the US, because the US will see more resistance to this thing than a lot of other countries, right? So some
Right.
countries will just adopt this stuff, and the government says, yeah, you're doing this, and then okay, we're doing this, right? And so
Right.
the US has seen a lot more resistance, and so to get over those resistance or those points we talked about before, but you use those key players within the economy, the same folks, the same companies that are considered too big to fail are going to be the same ones that get the bailouts and the support. The Fed is going to go back and say, hey, we scratch your back, so our back is itching right now, so it's time for you to return the favor. And they're going to say,
Right.
okay, Citigroup, Wells Fargo, JP Morgan Chase, or wherever these large banks are, they're going to go to, and they're going to go to the aviation industry and say, okay, airlines, we've supported you on this stuff. Here's what you do. Fed coin, we're implementing this. Start rolling this out in your coupons. Give it away for free, right? Your gift cards.
Yeah.
Okay. Give it the gift cards. It's got to be free at first, right? It's got to be stimulated. So it does two things for the government. It stimulates the economy, which they say stimulate, but there's no way of stimulating the economy. Thomas Sowell taught me that you don't stimulate an economy, right? There's no stimulating anything, right? But it, quote unquote, stimulate the economy, and at the same time introduce and percolate, if you will, into the economy the Fed coin. And so that's a way of doing it. Maybe they're thinking about this. Probably there should be smart people, or maybe I'm giving them ideas, but that's how you would do it, right?
Yeah.
Now, would this be a good thing? I believe no. Okay.
No. Yeah.
For the aviation industry, it would not. The very thing that the World Economic Forum article talks about, reducing the prospect for recessions and so on, it actually will exacerbate this. In fact, during say between the entire 19th century, when you had the panic of 1819, and you have a lot of recessions and so on, they got over with quick. Some of them within 3 to 6 months, the economy is back up and running properly. We got into this problem since we had the Federal Reserve, and since it got worse when we came up with the gold standard. So in my view, I believe it's going to be worse. For some folks, it's going to be good, because a lot of the wealth we see in the tech sector is because of easy money policy. So some folks will get wealthy, no doubt. Those who are connected. Yeah. So I think Ray Dalio is pretty good. He has some good books. I was listening to one of his books, The Debt Cycle. Reading one of his books, The Debt Cycle, and he talks about the debt cycle and some other things. And one of the things that strikes me is not just the fact that he subscribed to what we just talked about. I think he subscribed to the Keynesian model of economics. What surprised me is that Ray Dalio didn't talk about the fact that Bridgewater is one of the most connected institutions in the country, and therefore they would have access to whatever monetary policy first. And so while we're not chastising anybody, but that's important to note, because those who get the money first benefits, and those who get the last benefit. For example, let's give you a quick example here. I lend you $100. You lend me $100, but I have the ability to print money, and I went ahead and I print $500 more. Okay.
Right.
So your money just went down tremendously, right? Probably down to, I think, what's about 20% now, right? So now your money went down to about 20% or so, all right, of what it used to value. But that doesn't happen right away. So Cantillon was an entrepreneur back in the day. I think it was like 200 years ago, right, or so.
Yeah.
That wrote, we have it called the Cantillon effect, and what that does, it means that if I get money, if I print you, I lend you in the economy, I lend you, and you're the only person in the economy. For now, when I lend you the money, $100, and I print $500 more, and 5 other people come in the economy, or 5 other people come in the economy, and I give the $500 to one person. At the moment that $500 go to that one person, say the well-connected institutions, say the Bridgewater, the BlackRock, and so on, right? And again, this is how things work. We're not trying to chastise anyone. When they get the money, the prices of goods and service are still the same. It's only when they start spending it. So they get the money first.
Mm-hmm.
They spend at current prices, but they're spending drive up prices. And then the people get the money after, like the people who do this goods and who provide the goods and services and they pay their employee, they start spending the money when the prices have already gone up. So in an inflationary environment, and inflationary meaning putting more money in the economy, increasing the money supply, those who get the money first benefit first. So I find it pretty interesting that he didn't mention that, because they're well connected in the economy, and therefore they'll get the money first. And that's what you see with the Silicon Valley firms, and for example, Silicon Valley Bank and all these tech firms. They're connected in such a way. And some of these companies, even banks, even have their own account with the Fed. So I mean, they get Fed rates, and getting the lower rate with the Fed mean that you get money at money cheaper, and therefore you pretty much get the money first. And when they get the money, and then they spend the money in the tech stuff and doing all these things, they benefit a lot more. They get the wealth, they get the benefit of it first, and then afterward,
right?
It's like gradual. It's like, you know, it's not just one, you spend the money now and then the next person just see massive inflation. It's slowly. Next person spend it, the price goes up even more. Next person spend it, the price goes up even more. And so that's what I believe happens with some of these firms. And so you've got to think about it that way when you think about some of these things that you see happening in the markets and what happens there. Now, for example, say the aviation industry and the airlines, they get this money and they say, okay, we're going to pass this through to our customers through gift cards. Okay, great. The customers love it. Wow, this is great. They get the money. They put the money in the economy first. And passing the money through gift card, it's not free, because they'll tie the gift card to some kind of promotion or some kind of thing. Right. So you have to fly. So they're spending that money. So when they spend that money in the economy, and then the consumers get that gift card, spend the gift card, then the gift card that rolls back into employees' pay and all that good stuff. And then what happens is that the price goes up. But when the airlines get the money, prices were relatively the same what they were the instant they got it. Okay. And by the time it started getting spending them in the economy, then prices start going up. So that's called the Cantillon effect. And so you can expect that to happen, right? So those who are connected will still do good. Right? Those who are, the day laborer, the janitor, those folks that literally get the money last, those folks are the folks that are going to have a tough time. But the economy will still continue. You'll have a more wealthier people, what I meant to say is that the wealth gap will widen, and so on, even more. And then you might not have a strong middle class, because strong middle class depend on stable money and so on and so forth, more jobs, but and a bunch of different factors. But what I'm trying to say is that those who get the money first benefit more than those who are connected, right? Whether you think that's good or bad, that's you. I can give you my opinion, but you have to make your own decision as whether you think that's good or bad. Some people might think, well, heck, it's best to just work my butt off, get connected, and get to where I need to get the money first. Since we can't control these people, we're just going to get the money first. Okay, more power to you. You just got to think about where you are, how you look at things. There's a saying that I was raised with: early bird catches the worm, right? The banks. Yeah. And these connected institutions, the hedge funds, and say, for example, the airlines now getting this Fed coin, they're well connected. They're early bird. They catches the worm. They catch the worm, right? They're good. They catch a worm, right? But I also add to that, when I used to hear that as a kid, even as a kid, I'm like, this doesn't make sense. Because if you're early bird and you catches the worm, what happened to the worm? The worm gets eaten. So if you're a worm, don't go early, right? Or don't go there at all. Stay away, do something else, because you're going to get eaten, all right? And so early worm catches the worm, but the worm will be eaten. So those were at the bottom of the worms, right? And those were at the top of the bird. I would say just don't go, right? Just go get your money in Bitcoin, or I'm not advertising anything. I'm going to say get Bitcoin, get some asset that you can control, right? So just want to kind of end with that there, and just wrap up on that. It's a little bit crazy thought there we had at the end there, but it's something you guys can think about. But Danny, as we wrap up here, any final thoughts on your end?
No final thoughts, but I'm just looking forward to see how this goes. I'm not sure how long it's going to take for the government to enroll, or the Fed to enroll this program, but I'm just curious to see how this is going to turn out. I'm curious to hear what the audience has to say about this.
Absolutely. Absolutely. All right. Thank you, Danny. And with that, folks, that wraps up another episode of our podcast. We kind of got a little crazy at the end there. But thank you for joining us again on this one, and see you on the next one. Bye-bye now.